Oh, welcome, ladies and gentlemen. GDP is coming a little bit higher. Unemployment claims came in lower. Odds for the rate cut are just out in the bin. But at least Trump isn't going to be invading Greenland. Happy days, ladies and gents. Welcome to today's live stream. We've got a few things to talk about. I hope you like the thumbnail. That's Suni Williams. She's retired. We'll talk about that in a second. 27 years in space. That's wild. But anyway, not in space, but you get the idea. But anyways, let's just explain like what's going on. Is it now risk on, or are we just like forget everything and let's just go with it and anticipate that AI is just going to be the thing that helps us send the NASDAQ to all-time highs? And then, of course, don't worry too much about interest rates. We don't really need to care about that. We need to care about the currencies, because after everything fails, when you're trying to get everything sorted out, everyone is going to turn to the currency, because what's the point in holding an asset in a native currency if that currency asset itself is just going down and not doing anything? So we're going to break all of that down, break down a little bit of Bitcoin price action. It's starting to show some little bit of interesting behavior. Has everybody been wiped out? Well, let's break it all down, ladies and gentlemen. Keep this live short and sweet for you. Good afternoon, good evening. Yeah, the thumbnail is wild. Who cares if the thumbnail is wild? If I just put a plain thumbnail and said, this is not a thumbnail, people would complain about the bold writing on the thumbnail and all of that. God, forget it, man. I'm just going to whatever. Anyways, stocks. Well, this data has been a little bit interesting. And when the yields rise, it tells you what? How many of you would look at this and say that the yields rising implies that the expectation of interest rates in the future could be higher for longer? That's usually the case. Going into the calendar, this is what we've got. Final GDP came in, 4.4% after a government shutdown when it cost the US 1.7% in the GDP. Make it make sense. It's cooked. Unemployment claims showing great resilience, ladies and gentlemen. Again, cooked, because they're not going to focus on that anymore. They're going to focus on their mandatory target of 2% inflation. Let's go elsewhere. Final GDP price came in at 3.8. Cool. And now we're waiting for the core PCE price index. This will be a measure to help us understand if the cost of goods and services is going to go up or not. And we're going into the Bank of Japan press conference tonight. Tonight. Are we going to hear about Bank of Japan? Well, let me explain something to you, because it is very important that we focus on the Bank of Japan right now. A lot of investors are concerned about this, and I did a short on this just to help you guys understand what the importance is about Japan's currency crisis. Japan right now has got the problem that they are circulating with so much debt. And you know what? They call it the Japanese miracle, because the more debt they have, the easier it is for them to sustain themselves. Believe it or not, their debt to GDP ratio is currently 220%. That can go to 250% and the system will still work fine. You ever ask yourself the question why the dollar has gone up from $20 trillion in debt, or the US has gone up from $20 trillion in debt to $37 trillion in debt? And people are like, the dollar's collapsed, the dollar is bad, the dollar is bad. Yet from 20 trillion, you were like, okay, it's okay right now. Then going to 37 trillion, it's like, well, it's bad, it's bad, it's bad. BRICS tried to get rid of the dollar or come away from the petrodollar standard. Yeah, Trump pretty much nailed that, and that's proof right there. The Venezuela story is proof that you ain't getting rid of the dollar whether you like it or not. All right, you can go and buy your gold, you can go and buy your Bitcoin, and if you're truly about the idea of decentralized finance or just coming away from the dollar completely, well, you still pay your bills in dollars. I bet all of you went this morning and paid for your coffee in dollars. Whether you tried to pay in Bitcoin or not, the sad truth is that the vendors that are taking the Bitcoin are going to exchange it back into dollars. It's just a means to an end. Until you kill the idea of the dollar, then of course, that's when culprits like Bitcoin can come in and take over. But this is really important, because bond investors in Japan are concerned that the bonds that they are holding, which the Japanese bond itself was deemed as one of the safest assets, is now becoming worthless. So they're now caught in a situation like, well, what are we going to do? What's the Bank of Japan going to do? Going over into it right now, you can see the Japanese yen itself. It's currently trading very badly, like 0.24% negative for the day. It's just on a nice sweep to the downside. And technical traders, you don't even need to be concerned too much about what's going on with the yen, but it does help you understand because there will be a moment that the Bank of Japan, which have already been given authority for it, are going to start pumping dollars into the marketplace. And we call that the intervention. The last time Japan intervened was when dollar against the yen came to about 160. Okay. And it's been hovering around. Those two instances were at 160 and then we were at 161-ish. So we go over to dollar yen and we look at that price action to put it into perspective. And you can see that dollar yen is now looking like it wants to trade positive, which only means that the dollar itself is trying to do what? Well, it's moving down. Ain't that a fuck up? Look at this. Dollar is down, but dollar yen is up. All right. Yeah, up with 0.31%. This is being fueled off the strength of the dollar against the yen. And that's how you know it's a little bit crazy because the dollar dominance index itself is made up of the following assets. You've got the euro, you've got the pound, you've got the yen, and then the rest of it. But the main ones you got to focus on is it's the distribution of transactions that make up the index itself. So the euro makes up 56% of the transactions in the index. The pound comes in at 11%, and the yen comes in at 17%. So if you really want to understand where everything is going, understand what investors are going to be doing with their dollars and their yen. They're going to go to yen because it's cheap. They're going to go to their dollars because they can get yield on that because the yield is high because the rates are still high. Looking at the 10-year and the 2-year, we've got the 2-year yield currently trading higher, and that's usually going to be a problem for the stock market. 5-year is trading higher at the open, and the 10-year is trading higher at the open. But the 10-year bonds itself are actually trading negative, but they are still looking very nicely. And of course, with this story with Trump, it's obviously got people a little bit more comfortable about putting on risk. But the fact is, with this data that's come out, it's kind of painting the picture that the Fed doesn't really need to be cutting rates, and we know that to be the case. Check this out. Goldman Sachs come out with these speakers, well, based on the conversations from speakers, as in the FOMC speakers. You got Bauman saying, I see policy as moderately restrictive. Cool. And then Jefferson's comes out saying, in my view, 175 basis point cuts since the mid-2024 brought the Federal Reserve's rate into a range consistent with the neutral rate. No information. Schmid, I don't think that monetary policy is currently very restrictive. Okay. That suggests to me that the neutral interest rate in the economy has moved up and that the current stance of policy, which we could have been restrictive before pandemic, is no longer very restrictive now. So if it's not restrictive, does that mean there could be some room for restrictiveness just to get inflation down? And then Kashkari comes out and says the economy has proven to be more resilient than I expected in the face of higher rates. It makes me wonder, how restrictive is policy? And when you see these sort of comments, you just go over to the Fed Watch and you ask yourself, so where is everybody's heads at? Right now, the rate bets are coming in at 70.2% at 3.5, 3.75. Sorry, that's for April. So we ain't getting no rate cut in March because that's coming in at 84.1. And we certainly ain't getting no rate cut in January because that's coming in just as good at 95%. So it's safe to say that the yield on the dollar is going to go higher because the interest rates are going to stay higher for longer, which equally means that dollar yen is going to continue to go up, which effectively has been giving the Japanese a little bit of a cause for concern, which only means what? That they're going to flood the market with dollars. Fundamentally, that should be a good thing for Bitcoin because dollar will be then coming down. But if the Bank of Japan does decide to sell dollars, that effectively means offload on their US treasuries. The market might then use that as an excuse to get involved with the carry unwind. Because if their dollar is actually dropping, that means their investments in the stock market are becoming worthless. And not so much worthless, but you're losing a lot of power or value in your dollar. And that's the problem that we've got. Keep an eye out on dollar yen. If dollar yen does succeed and gets above the 159.5, we've got a big problem. And the Bank of Japan have already got authority from the United States that they can sell US debt. That's what they mean by pumping dollars into the marketplace. And Japan, given that they are the largest holder of US debt, and the UK coming in second place with China, with US debt, and China is just offloading like no tomorrow. This is the red line right here. China is just dumping US debt. So you could assume that the value of the dollar is being suppressed by the Chinese, yet the Japanese and the UK are loading up on the US debt, But Japan do have authority to sell US debt, which is naturally going to inflate the yield on the 10-year, and investors are going to be getting much better rates of return. And then we're going to have the problem of yield inversion, because then investors will be like, I don't like the way the story looks in the future. And that means if the 2-year yield is trading higher than the 10-year yield, it means investors are earning more money holding US debt for shorter periods of time. That yield inversion can effectively lead to what? Recession. Wonderful. This is class, ladies and gentlemen. Anyways, let's dive into what's going on in the news. Check this out. Here she is. NASA astronaut Suni Williams retires, 27 years chilling in space. So after 27 years, NASA astronaut Suni Williams retired from the agency effective December 27. Williams completed 3 missions aboard the International Space Station, setting numerous human spaceflight records throughout her career. She was in space for about 9 months as well, and that's what the picture of the thumbnail is. But if you look at the thumbnail, is that not the stock market? Just whipsaw, wacky, smacked out behavior. Let's go and quickly have a look at where we are with the NASDAQ. NASDAQ right now is just trading at the highs, value area high, sat at premium levels. We don't have a war to worry about anymore, but it looks like that is going to be very interesting. Volatility index has taken a shoe bag to the downside, so investors have effectively hedged themselves. Going into oil, we can see oil is just going sideways. The Venezuela story is not up there anymore, but all these American companies are starting to pump out and get access to this oil. We've had some interesting news from GE Aerospace stock in buy area after strong earnings guidance. Of course, you're going to get a strong earnings guidance. There's been mad contracts from the US for defense-based companies to just produce. It's just absolutely wild. And then on top of that, we've got Trump. He's pulling another flavorsome move. Maybe this freeze on income tax could actually happen. It says here, Trump's IRS chief reorganizes tax agency days before filing season. Well, Mr. Trump, what are you going to pull out of the bag? Let's be honest now. I mean, if he's going to stop putting taxes on tips, all right, which you shouldn't be taxed on tips. Hell no, you shouldn't be, right? If he starts reorganizing the way taxes are paid in the US, I mean, everyone's going to be loving life, but will that be good for the dollar? Which brings me to the idea again, that the Bank of Japan have got a problem with their currency. It means their investors are holding onto bonds where the currency is losing value. So if you want to really get rid of that, you need to increase the value of your yen. If you actually go and Google, can you have a strong dollar and still sustain high interest rates? Yes, you can. All right? Because then it means that you require less dollars to put to work. It's when you have a low value dollar where you're going to have the problem, because you then require more dollars to put to work. Now there's the balance. You know, if it's good if the United States has a strong dollar. It's bad for everyone else. But if the dollar is weak, it's great for everyone else. But they're trying to find the happy medium. And that's the problem we have got. And I think that the Japanese are going to be the catalyst to trigger investors to start, in essence, if they know that the dollar's value is going to increase, right? Or there is an anticipation that rates aren't going to get cut, that means yield on the dollar is going to be higher for longer. So dollar will naturally increase. But if there's going to be a cap, then investors will be short term. All right. And they'll only hold dollars for a certain period of time, whether it's a few points or not. Maybe when it goes above 100 and it gets to about 101, that would then easily put the dollar yen at the 160 mark. That is when the Japanese will come in and start switching things and loading the market with dollars. So what does it do for your Bitcoin? Well, ladies and gentlemen, is Bitcoin a risk on, risk off asset? Going into it right now, Bitcoin is just going sideways. Look at this behavior. All right. The one asset, the commodity that everybody talks about all their treasuries and everything. And it just goes sideways in like a flipping $200 range. What on earth is going on with this asset? No wonder people can't be bothered with it. Solana is down. Bitcoin is up. Ethereum is down. It's just not doing anything. And there's lots of liquidations down below. But don't worry, because Intel is saving the day. They had a great day yesterday. And then, of course, we go over to the NASDAQ. You can see that the NASDAQ right now has managed to successfully make a move up from yesterday. Didn't quite finish strongly at its highs, but volume was above average. But overall, in the indices themselves, the relative strength rating across the NASDAQ composite is trading negative, which effectively means you buy the dips, you sell the rallies, all right? We're not in that era right now where you want to lock in value because value-based stocks are seen as overvalued right now. Quickly putting it into perspective, I'm just going to go over to the stock bond ratio just to give you guys a bit of an idea on where we are with that. Because when the stock bond ratio starts to trigger this, it tells you that we're overvalued. So look, stocks are relatively overvalued in comparison to the bonds. The bonds line would be the green in principle, and the red line would be the stocks. So every time we get to these levels of extremities, we then say to ourselves, well, are we overvalued? And you can see from the last time, when they actually were overvalued, they started to creep up ever so slightly, and then they started to turn over. And then it was a freak of nature because it was around the last drop was the April tariff story. So everybody went into the bonds because they were scared. And then the stocks were effectively undervalued relative to the bonds. And then it just creates this reversal back up again. You can use a chart like this. You can also use the volatility index. It all just gives you the sentiment of investors across the board. All right. Now, volatility index could give us an idea of the future where we see these vectors over here. And if you look at it, they are just bouts of volatility. That's all they are. And for me, when the volatility index does get above the 24 or the 30 mark, that for me will be the super discount zone for absolutely everything. It doesn't mean that you can't exploit these peaks up and down. Of course, you've got this range right here, which was the tariffs. That's what I mean about it. When it's above 30, you go nuts, all right? Because the stock market will always recover because this is a hedging tool, all right? It's a gauge. It tells you what they're doing. It's the basis of the put-call ratio on the S&P on how many people believe prices should be higher or lower, all right? And it does give you that hookup. Now, there was a while ago when the volatility index wasn't making sense to anyone, and that is something that does happen. But it does serve itself as a good gauge. If you use this and then you put NASDAQ next to it, you're going to get yourself some very interesting opportunities. But it doesn't move as fast, which is why I suggest you go over and look at other contracts like the UVX, the short-term futures ETF. Look at VIX futures ETFs. Have a look at those because they tell you the movement because the volatility index is a gauge, but it doesn't move at speed, all right? So just if you want to see the order flow and get all the options data on that, then check out the ProShares, Ultra VIX and what have you because it does give you an idea of what investors are doing. Quickly going over into Intel, given that yesterday it was up quite strongly. Looking at it in the out of hours, it is trading negatively. It's done great on its earnings. And of course, we've got the story with Microsoft. Where is it? No. Yeah, Intel is going on about efforts as AI data centers boost chip demand. I've told you about data centers. I got you into quantum computing and you guys ripped it on that. It's now data centers. Data centers require chips. So look at electromagnetic companies. Look at TSMC, who is heavily invested right now in Japan in building factories. And now that Japan has just reactivated their nuclear reactor, why do you think they're doing that? Because TSMC is planting factories over there that are going to be filled with data centers so they can produce. And they're going to need to power that bad boy up with nuclear power just to make it worth their while. Ladies and gentlemen, they're just giving it to us on a plate. But we're spending too much attention on BS with Donald Trump wrecking the game. Anyways, any questions before we actually get going off? Here we go. Here we go. We got something here. I'm going to answer this question. I'm not really sure how you can claim that Bitcoin is risk on. It is literally up like 400% since 2022. If it was a risk-on asset, we would likely be much lower than we are now. I don't know if that question is for me, but is Bitcoin a risk-on asset? The sad truth is this, ladies and gentlemen. This is Bitcoin. This is when they listed gold on PancakeSwap. And gold obviously had a great time on PancakeSwap. And it's just ran up. It's on Deck Screener, all right? It's got its audits, everything is just pumping, pumping, pumping. The Telegram is going crazy, all right? And as a meme coin, I think, sorry, it has embarrassed Bitcoin, and that's pissed me off because everyone claimed Bitcoin to be digital gold, okay? And then they aligned the idea that gold goes up, Bitcoin goes up because it's going against the US dollar. But the proof is that gold's going up on a macroeconomic factor, and Bitcoin is not subject to it. That's the problem. Bitcoin would be negatively correlated to macroeconomics because if macroeconomics are doing bad, where do you go? You go to the hedge. So why the fuck's Bitcoin dropping against gold? That's the problem we've got. When we can answer that question and say, yeah, Bitcoin has been able to stand the test of time. You see, listen, everyone complains that and says that you have never sat in a bearish market in crypto. What are you talking about? We were here in 2021. All right. That's when I started looking into cryptocurrency. Someone said, do Bitcoin price action. And from there, all we're doing is now talking about this asset that performs wildly. I mean, it was pretty quiet back then. But anyway, you got the bull run. All right. But not many people in cryptocurrency have sat through the legacy market corrections. All right? Bitcoin hasn't done that. Bitcoin hasn't had its true crash. Bitcoin, since when does Bitcoin give a damn about non-farm payroll, CPI, core price index coming out very shortly, FOMC? No one in crypto gave a shit about FOMC. No one did. But because you've now got your ETF that's made up of 770,000 contracts of Bitcoin, or Bitcoin itself, you've got to pay attention to the yields. You've got to understand why the Japanese yen is going to be a problem for the world if they don't do something about their devaluing currency. That's when you're going to get Bitcoin to be the asset that moves along gold. But because it doesn't have that yet, they don't turn to Bitcoin when times are difficult, even though you've got a supply. How mad is that? 21 million supply, 19 for, let's just say it's 19 million, minus the mining that's happening right now. We call it 19 million because there were donuts that got it confiscated and they lost it. You stupid anyways. But anyways, like, man, I'm going off right now. Tino, Bitcoin moved before gold. Yes, okay, Bitcoin moved before gold. All right, cool. Yeah, when a new asset hits the marketplace, it does really well. But how old's Bitcoin? How old's gold? How many crashes has gold been through? How many crashes has Bitcoin been through? We're going to know the proof when there is a crash. And when the crash happens, if Bitcoin just copies what everybody else does, bang, stigma attached. It's just going to do bad when it's risk off, and it's going to do great when risk is on. And the only one asset that performs well macroeconomically is gold. And of course, if Bitcoin starts to realign itself away from the macros and makes people think, well, if the dollar is doing bad, I'm going to go into gold. Well, it clear as day, gold is the priority for the legacy markets, is because it's all they know. And unfortunately, whether we like to admit it or not, I'm not trying to shit talk Bitcoin. I'm trying to get you to understand how it transitions when you come into a marketplace. Remember, we came to Wall Street. Crypto came to Wall Street. Crypto was there with the doors open like, come along. Yes, you can give us your pass. Yep, make your way. Donuts, liquidity. Thank you. What are they talking about? They want an ETF, what, for Bitcoin? Yeah. Are you serious? Yeah. Look what's going on. They create these meme coins and it always gives an influx of liquidity coming in. Yeah. All right, where's Larry? Get Larry onto this. Get Larry. Put him on Bloomberg. Tell him to just, I mean, he was talking shit about Bitcoin before, but now just get Larry into it. All right, cool. Yeah, we think Bitcoin is the future and real world asset allocations and what have you is going to be great. You know, we think this is going to be a wonderful thing. January 12th comes in. The Bitcoin ETF is all good. Happy days. Everybody's so excited. You just gave your Bitcoin to Wall Street, man. What the hell are you doing? Which proves that you're not in it for the tech. You just want your Bitcoin that you entered in at 50K to go to 250K and say, here you go, miss. We screwed them. We got paid out. Happy days. Now it's a flex saying that you sold your Bitcoin. It really is. It's a flex. You sold your Bitcoin. Look at the 5KOG. Sold his Bitcoin, 295 million. You think he gives a shit about the treasuries of Bitcoin or anything else? Nope. Anyways. Tina, do you expect the Bank of Japan to surprise us and raise interest rates tomorrow? I don't think they will raise interest rates because they've been given the okay by the US to sell US treasuries. They either increase the interest rates to encourage investors to go and buy yen. Stick with me on this one. They increase interest rates to encourage investors to buy the yen and get them into the yen bonds. But Japan has got a problem with their bond market because their currency is so undervalued. So whether you increase the rates or not, it's not going to keep those guys happy because their currency is obviously so devalued that the existing bonds that they have are just worthless near enough. And they've got that problem. But when you flood the market with dollars, your yen goes up. Now it makes it worthy to hold on to those Japanese bonds. You keep those bond traders cool. And now they've got an increasing yen. That means their bonds are worth something. And then we can talk about the story of interest rate increase because economically, they don't need to increase their interest rates further. It's a currency issue. And that's when the carry trade unwind comes into play. When the carry or investors see that the yen or the dollar has hit extremes. And once those extremes have been hit, that's when the carry comes into play like, oh no, we better get rid of our dollars. The perfect time for the carry to unwind, in my opinion, would be when dollar succeeds 100. When it's above there, you've got purchasing power. You've got appreciation. That means you can at least sell your stock and retain a certain amount of dollars and try and get that done as soon as you can. Quickly go over to the yen and take advantage of it going up as a safe haven because everything's taken a nosedive. They'll have to sell their stock and then get those dollars, convert them back into yen so they can avoid the cost of what they previously borrowed yen for. And now they've increased their interest rates and then they play the game. That's all it is. Hi, Tony. 4-letter word like T. No. I don't get that. Anyways, Tino said all along that's Bitcoin is a risk-off asset, bro. It is a risk-off asset, man. Like, look, it's down. You know, what's the NASDAQ doing? All right, this is the truth about it. Look, when NASDAQ is pulling back a little bit right now, okay? So just go to the 5-minute time. Okay, it's just pulling back. All right, it's moving down. All right, cool. We have had some wild data. I'm not going to lie. Like, we've just been told that interest rates are going to be increasing or being held higher for longer. Your dollar is down itself, okay? So there's already a problem right there. The euro is going up and the yen is moving up, which means what? It means that investors are going into the safe havens. What's gold doing right now? Well, gold is trying to work its way back up again, okay? So investors are like, oh, interest rate. Are we going to get them cut? No? Okay, then. What about everything across the board? Well, it looks like it's a bit of a shit show. Okay, then cool. So let's just go back into gold. What about Bitcoin? You know, that's a bit of a shame. Dollar yen. Not good. Bitcoin. Come on, Bitcoin. Do your thing, Bitcoin. Do your thing. Let's just have a look at the ETF. Let's see what Larry's been up to. I know he sold 700 million. Well, clients sold 700 million, not BlackRock. They did it on their behalf. They just made a little bit... This is good news. This is good news. They're not going to sell it when it's dropping. They're going to sell it when it's rising. Maybe the pump earlier on could be the case up there. Maybe. We don't know. But they'll only sell the Bitcoin when it rises, in my opinion, given that they sold it 3 hours ago into Coinbase Prime. So we'll see what happens there. I'm reading the comment, bro. Listen. All right, let me just... Look. Crayon Dave, sorry. Listen. I'm reading one comment, reading another. All right? Chill out. All right? For me, Bitcoin, when we say risk on, okay, means effectively when everything's going up, Bitcoin will go up. All right? When it's risk off, Bitcoin goes down. Gold, in my opinion, is the risk on asset when risk is off. All right? So when you're concerned about things, you go to gold. Because when the stock market's crashing, gold's going up. All right? Likewise, when the stock market crashes, oil goes up. Subprime mortgage crisis, 2007, 2008. What was gold and oil doing? They were going up. And then they declared, and then we had the problem of the subprime, and it peaked out at 2008, March the 18th, and then gold took the slump. But they already hedged themselves and they covered their positions. And then they get ready for the next hedge. Gold then pulls back. We see the next crisis developing. And then, of course, it moves all the way back up again. Listen, just if you can buy a certain amount of Bitcoin or gold or whatever it is you're buying, okay, when it crashes, just close your eyes and buy. That's all you got to do. Because we've proven that the stock market does recover 100% of the time. It does. Because the machine needs to keep working. All right? If the dollar were to collapse, then those of you that were playing Fallout back in the day on your consoles, you guys are going to be very important for us because you're going to know what to do with the bottle caps and all the ways of surviving. But it's not going to happen. From $20 trillion in debt, did you not think that they were having the same conversations that we are having right now about the US debt? Of course they are. US debt could succeed easy, 40 trillion. It's like they're aiming for it. We got lots of debt. This is what the Japanese miracle is. They were just operating on debt, loads and loads and loads of debt. They were able to sustain themselves. All right? And the Japanese can keep on being in debt, but it's when the currency gets screwed. When the currency is screwed, we've got a problem. Anyways, with that being out, Fallout reference. Yeah, whatever. Anyways, listen, mad love and respect, guys. And please trade safely, and I'll be tuning into you all later on. Mad love and respect. Peace.